Ever wondered what's about to hit the S&P 500 and Nasdaq next week? Buckle up, because we're about to decode the market mysteries using some powerful tools that traders swear by. Alright, so here's the deal. In a world driven by numbers and trends, we've got some impressive indicators on our side. We're talking MACD, RSI, and for a bit of spice, sentiment analysis. Sound intriguing? It should, because these are the very compasses that can steer your investment ship through stormy waters. Now, let's kick things off with the MACD, or the Moving Average Convergence Divergence for those new to the term. Think of it as your market pulse checker. It tells you how fast and in what direction the market is moving by analyzing the relationships between moving averages. Picture two lines dancing in harmony or discord. Their moves are a symphony that hints at bullish or bearish trends. Here's a little secret for you. When those two lines cross, it's like a subtle nudge from the market, whispering that something's about to change. And right now, we're hovering around one of those whispers on both the S&P 500 and Nasdaq charts. Switching gears to the RSI, or Relative Strength Index. Imagine you're at a party, and the RSI is your friend who gives you the heads up when things are getting too wild. Essentially, it tells us when stocks are overbought or oversold. In trading terms, it's like a speedometer alerting you when to slow down or hit the gas. We've been keeping an eye on those RSI levels. Believe it or not, both indices are inching towards a tipping point. The kind where you ask, is it time to rethink my strategy? Or, should I be getting in or out right now? And of course, we can't forget about sentiment analysis, our third musketeer on this market adventure. Picture scanning endless social media feeds, news headlines, and financial reports. What headlines are popping? Which sentiments are trending positive or negative? This is like taking the pulse of the entire market mood. It's the vibe check you need before making any big moves. Currently, there's a wave of mixed sentiment, ranging from exuberance over stellar tech earnings to jitters about economic headwinds. How does this emotional roller coaster play into our technical analysis? It's all about balance. Sentiment can often be the last piece of the puzzle, confirming or countering what other indicators tell us. So, what does all this mean for the weeks ahead? The convergence of MACD's suggestive patterns, RSI's thresholds, and a whirlwind of sentiment can set the stage for our next move. It's both thrilling and daunting. Feeling a bit overwhelmed? Don't be. We've got you covered as we dive deeper into each indicator and unveil their secrets for what lies ahead in this volatile market. Get ready to arm yourself with insights that could shape your financial future. Let's unpack more of what MACD is whispering to us about those upcoming market moves. Remember, when the MACD line crosses above the signal line, it's akin to spotting a green light at a traffic intersection. It hints at bullish momentum. Right now, in the case of both the S&P 500 and Nasdaq, we're witnessing some tightening in those lines. This suggests a potential breakout that could either burst upwards, giving us that bullish run, or plunge, warning us of a bearish downturn. The suspense is real. Now, let's blend this technical choreography with RSI insights. The RSI doesn't just stop at indicating whether a market is sour or sweet. When RSI levels hover above 70, we're in overbought territory. Investors beware. This might just be your cue to reassess euphoria-driven rallies. Conversely, dipping below 30 signals oversold conditions, a fertile ground for capturing undervalued gems. Again, we're approaching key thresholds on the RSI for both indices. It's like a cliffhanger in your favorite series. All eyes are locked on whether it teeters over or rebounds spectacularly. What's happening right now is giving us all the more reason to stay glued to those numbers, because they're reflecting a tug-of-war between market optimism and skepticism. And sentiment. Let's turn back the volume on our market mood soundtrack. With major global events stealing headlines and economic policies swinging the pendulum, human emotion is laid bare in those sentiments we mentioned earlier. Twitter buzzes with excitement over tech innovations, earnings reports crescendo. Meanwhile, political tensions simmer in the background. It's like mixing a cocktail where precision and timing determine whether you're crafting bliss or brewing disaster. Picture this. A headline-driven frenzy elevating investor fears about potential recession impacts, yet tech breakthroughs promising futuristic possibilities. Investing becomes a tense dance between innovation bets and economic alarm bells. Thus, sentiment acts as the tuning fork, aligning the emotional pitch with our technical readings. So what's the game plan here? With MACD hinting at a breakout and RSI thresholds flirting with extreme zones, it's time to wield sentiment as a third eye, almost like a gut instinct, to assess whether these technical signals are validated or negated. It's about piecing together this triad into a cohesive radar system. Let's strategize. Think of it as a market survival toolkit. If MACD's whisper predicts a shift, complemented by RSI confirming whether stocks are overbought or oversold, then sentiment is the gut check. Already grasped your attention? Good. Because here's when the magic happens. Such a trifecta provides you with probabilities, not certainties, yet those probabilities can be leveraged for strategic decisions. Now let's talk about those probabilities transforming into action. Considering a potential bullish play. If MACD gives you the green light and RSI shows room to grow, sentiment analysis can alert you to broader market optimism to seal that decision. Tempted to buy the dip? Evaluate whether our indicators collectively signal genuine opportunity or a mirage. Staying vigilant about these indicators as we march into next week is crucial. Integrating them into your decision-making adds layers, depth, and most importantly, confidence. This is about transforming data into decisions and analysis into action, your secret arsenal for making sense of market chaos. And remember, these tools don't just spot movement, but reflect the underlying psychology driving these changes. Paints the picture of market waves not just as numbers but as narratives, doesn't it? They give you a lens to see feeder movements before they hit mainstream eyes. Yet one thing remains vital. Manage your emotions. As your technical tools align and sentiment sways, it's easy to get lost in a swirl of excitement or despair. The key here is balance. These are tools to guide, not dictate, your investment choices. In closing, there's exhilaration in this thrill ride called the market, filled with lessons and surprises. By understanding MACD's rhythm, RSI's balance, and sentiment's pulse, you become more than just a spectator. You become a player in the field. Are you ready to navigate these market winds with newfound insight? Because one's financial journey is not just about predicting tomorrow's markets, but about preparing for them. As we sign off, remember to hit that subscribe button so you don't miss our next deep dive into strategies that will further arm your market toolkit. Share your thoughts in the comments. Let's chat about your predictions or how this analysis feeds into your own strategies. And until then, keep your eyes on the indicators and your heart in the market. Stay savvy, investors. So, what's the grand takeaway from today's deep dive into the S&P 500 and Nasdaq using our market crystal ball? The MACD gives us insights into momentum shifts, the RSI guides us on market saturation, and sentiment analysis paints the broader emotional landscape. Together, they create a comprehensive picture that empowers us to predict potential market moves. Here's the critical part. These insights are not just theoretical musings. They're powerful tools you can apply directly to your trading strategy. It's about making informed, confident decisions that align with both market conditions and your personal goals. Now, your mission. Take this knowledge and integrate it into your own analysis. Experiment with these indicators. Watch for those pivotal moments of convergence and stay attuned to the sentiment currents. And now for our closing thought. Investing wisely is about staying curious and continually learning. So, if you've found value here, consider hitting that subscribe button and ringing the bell for notifications. Share your own insights or questions in the comments. We love hearing how you navigate these market waters. Until next time, stay informed, stay proactive, and let's conquer those market mysteries together.